Hey, good morning, good afternoon, everyone. This is Trendy John from Simpler Trading. We are going to knock out this week's broad market analysis. We will be covering the dates of the 21st through the 24th. The 20th is a holiday. Before we get started, if you would mind, just go ahead and hit the like button. Leave a testimonial, if you will, in the comments. And please, if you know anybody who is looking to learn how to trade or incorporate supply and demand trading into their normal routine, please guide them towards these videos and hopefully I can help them out. Let's go ahead and get started with this week's major U.S. economic reports and Fed speakers. As I said, Monday is a holiday and it is the inauguration. I'm looking for a gap up potentially in the market. If not, that's okay too. But again, we'll see how that translates to the market on Tuesday. Tuesday, nothing scheduled here, so this makes me feel like if we gap up, it could be like a nice melt up towards some levels that I'll be sharing with you guys here shortly. And if for some reason it's a gap down, we'll cover those levels as well. On Wednesday, we have U.S. leading economic indicators. On Thursday, initial jobless claims. And then on Friday, we have consumer sentiment followed by PMI. So far as this calendar is concerned, again, the question is, do we come in off of some sort of big bullish move? And I mean, if you're looking at crypto and you're hearing about the Trump meme coin, then you would feel like the market's pretty bullish, right? My overall sentiment, it was really interesting coming into this week because technically speaking, looking at supply and demand, we're still close, or we did come into a supply zone on Friday. We moved down from that supply zone just a little bit, but we held a very bullish channel of that move back. And so we could find ourselves on a gap up. And that is my sentiment, just to kind of follow trend. Things are looking really good after last week's buy in the demand zone. Okay. All right. So, and then it gets more interesting as we get down here towards Thursday, where we get some econ data and in these areas here. My thought is if we gap up into a couple of these levels that I'm thinking we do, that this information here could pull prices back. But again, it just kind of depends where we are when we get there. And of course, price is king. The next thing that I want to be looking forward or talking to you with is earnings for this week. So again, I'm using Earnings Whispers out here on X. This is where I go to just to take a quick glance of the calendar itself. And there are some names on here that I'm definitely interested in trading into earnings. I love trading uh, call and put debit spreads into earnings. And what I do is I use supply and demand to identify the zones. And then once I work up the spreads, what I'm trying to do is if one of the spreads pays, that it pays for both sides of the trade plus some. And they're really fun to do. But again, you have to look at the structure and the overall risk reward and see if it's worth it. And I like to review that. So coming in on, I'd say Tuesday, when we come in, I will be discussing Netflix, so I'll be looking forward to that. Some other names that I'm interested in would be United Airlines, DR Horton, and then on Wednesday we have PG, Kinder and Morgan, Johnson and Johnson. I have a long-term leap position in J&J where I'm long 360 plus days out, but I'm also hedged into earnings with put debit spreads. Okay. So I am definitely interested in what Johnson and Johnson reports. I don't care about the numbers and stuff. I'm just watching price action. Okay. Moving on down, Halliburton might be a name that you're interested in. And then as we get into Thursday, GE, and then Texas Instruments, and then American Airlines. And then moving after that, maybe UNP, Alaska Airlines. And then other than that, I'm not too interested in any other names that are reporting for this week. But earnings season is kicking off. This is like a fantastic part of the year. Not only are we having the inauguration, but we also are kicking off earnings. It should be, you know, it should be volatile. It should be fun, and I love anytime the market does get volatile. It gives us a lot more price action to trade. So looking forward to this coming week. The next thing that I want to go over with you guys is going to be the SPY using a quarterly chart. So the reason why I use this is because my focus has to be the bigger candles. Although we do trade several setups where we are looking for profits from an intraday perspective, my bread and butter or my focus is always the bigger charts. So each one of these candles represents one quarter. Um, and because of that, there's a couple things that I would like to tell you going into this year that are very, very important. This down here is an exponential moving average made up of several different averages, and it's a cloud. The cloud itself, you can see every time prices come back on the quarterly, it's been a great place to buy the dip. I always like to talk about this because if it happens, you can be sure that I am most likely going long in here. And so, if for some reason in 2025 we get the big spike down, I am definitely interested as we come into the cloud. The better levels for me are around this 465 level. That price has still not come back and tested in here. But, it's not a matter of if, it's when. I do believe at some point we could come back to here. I don't know if it'll be 2025 or not. But for right now, this cloud is really, really important. Far as notes are concerned, the 572 level from last week held well. We didn't actually come back to 572, but I did report last week that it was one of my most important levels that I was looking for. We actually came into 575, and we'll show you that a little bit later. It worked perfect. So it was a demand zone. Things worked out really well, and then we rode the trend to the upside. Okay. Now, price did stall at resistance on Friday. And as I said earlier, price closed over the 618, which means the downtrend that started in December has now flipped and will resume to the upside or the uptrend as long as 596 holds. The two major levels for this week are 605 and 592. The 618, which is the golden Fibonacci, is your over under for this week. There is weekly supply up above near $602.40. Okay, let's go ahead and pull up. I'm going to minimize this really quickly. Let's go ahead and pull up SPY and let's look at the weekly right here. So this is a look at SPY with a smaller time frame and also looking at the Fibonacci's. Okay, so I'm going to bring it into, we can bring it to a daily if we want, or sorry, a weekly. And this is what we're looking at. So price did come into this area. Why is this area important? Because I went over it with you guys. I said this is the area that I feel like it comes into for the first quarter of this year, and it definitely did. So my overall analysis was great. You just had to be super patient and wait there. What we did was, and well, what I did in my portfolio was I added to a lot of my trades that I got started in the beginning of the year. And then as price pushes up, you take some profits off and so forth. Okay. So that's what I'm looking at right now. The 618 that I was talking to you about is what I'm doing is I'm anchoring my coefficients from the highs to this low. And then this is the 618. We did break above it, which means this downtrend that I measured is now resuming to the upside. Okay. And that's where I just went over those numbers with you. That's where they're coming from. Okay, so the two major levels are going to be the 88.7, which is 605, and then again down here towards that 592 level, and the 618 is my over under. So all I mean when I say over under is if price is stuck underneath here, look for it to most likely find bids around 592, and if it stays over, we stay bullish for prices to push up towards 60120. And then the supply zone that I'm talking about happens around 602, 602 and a half. But overall, my trendy methodology states that if price can hold above the 618, which is this, we have an 85% probability of seeing 605. And if we create a base over the 88.7, when I say a base, I would say at least 2 to 3 days of solid action and a close over this, we have a 95% probability of making an all new all-time high. Okay. So again, that is SPY. If you guys have any other questions on SPY, just let me know. And please understand, we just showed you higher time frames, but I break it down in the morning and we go over the ES futures, which correlates to the SPY, and we trade SPX specifically. But we have intraday setups as well, but this is again a little bit bigger picture and more important for me. Okay. Let's go ahead and move into the Qs. So we'll take a look at the Qs on the quarterly. All right, so on the quarterly, same thing, the exponential moving average, the cloud, it works really well. You guys can see that. Nothing changes here. One thing to note, just a few little words here. The past week, buyers did step up and push price back to the upper yearly edge. That is the trendy edge. So this is an indicator, and I'll show you that here in a second. Unlike the ES futures, the Nasdaq did not close above the 618. Bulls need to gap up and over 524 and a half. Current price is at 521. So 424 and a half is kind of, that important level, and hold for a possible move into 530 to 535. The two major levels this week are 515 and 524 and a half. So let's go ahead and go over here to the Qs and take a quick look. Same thing. I want to show you what I'm looking at. So if we anchor the Fibonacci from that high to that low, you'll notice that we actually came up and smacked the 618 and then we pulled back. So this is really important because when I'm anchoring the Fibonacci's from that high to the low, we really want to see price action close over the 618 because then it can resume to the upside. I'm not saying we can't resume to the upside, but this is definitely an important number for you this week. So your major levels going into this week are going to be that golden Fibonacci. And then down here, the reason why I like this 38.2 is because it is confluent with the 9 EMA on the weekly time frame. And those are very important for us, right? We know that if price slips back below the 38.2, which is 515, that means that we are back in the bearish channel, and that's not a good look for the Qs. So again, major levels above that golden Fibonacci. And again, if we can create a base and hold above that, I am looking for 530 and 535. And again, a base above 618, I look at the 85% probability rule that we can hit 88.7. And just like the SPY, if for some reason we're able to hold above the 88.7 for 2 to 3 days, I'm looking for a 95% probability that we could see a new all-time high. So that is the Qs. If for some reason we break below the major levels to the downside, guys, that's where my bullishness kind of comes to an end, and basically I'm waving a yellow flag. And there are reasons that I'm going to show you here towards the end of this broad market analysis why you should be cautious. Okay. All right, so that is the Qs on using fibs. Now we're going to go back to TradingView and we're going to take a look at the dollar. Okay, so to look at the dollar, you type in DXY and that's going to bring up the dollar. We don't want to look at it on a quarterly, but since we're here, I will go over it with you. The quarterly, and we've known this for quite some time, is super bullish. It looks amazing. It looks like the dollar is about to take off. But on a smaller time frame is where we live, is on the weekly. And the reason why is because I'm doing this a week to week basis. Okay. And this kind of really helps with our traders who are just looking to make income during the week. So we did hit the supply zone. We got the rejection. That's kind of what I was looking for. But at the same time, I'm also telling you to be cautious as long as price is over 109.5. Current price is at 109.4. So we're just kind of teetering right there. If the dollar extends to the upside, in most cases, the market is pulling back. So really what you want to see is that the dollar continues to reject here, but you also want to understand where buyers can show up, because buyers showing up could signal that the market is about to pull back a little bit. Okay, so our flexibility in here as a bull, we want to see it stay below 109.5, and we want it to slowly drop below there and come back towards the 107.8 level. And if we get to there, that's where I'd be looking for a relief bounce in the dollar and perhaps a pullback in the market a little bit. Okay. Now, if you get a sudden drop and things really sell off, then your next level is going to be 106.3. As a bull, I would love to see 106.3, and then I would definitely be cautious right into that area. Okay. So again, major levels for this week, 109 and a half, and I would say 107. And then for some reason, if either one of these break, if we break above, look for 111 and some change. And if we break below here, look for that next level at 106 and a half. Okay. All right, let's go ahead and move on. Now we're going to get into the 10-year Treasury. This is also important, okay? And what we want to see here is that, things just kind of slow down. So we got towards the 88.7, which is where I was looking for that target once we got over the 618, and we could still see it. Timing is the variable. So the 88.7 has not been tested, but I would say these are your two major levels, 4.847, you can see it there, and your 618 at 4.47. What I'd like to see is just sideways action. Okay, so just stay in here, and it would be nice if we stay under 4.67. Okay, next I'm going to be taking a look at the skew, and currently this week the skew is at 165, which it's come down just a tad, but it's still in the area where we say protect and or risk off. Remember, I've been going over this for many, many years, and this box right here for 2023 and a half, 2024 has worked very, very well, and it continues to be the major levels that I will use in 2025 until things change. Basically, the way this works is you want to be careful in this area. If you were to put a SPY chart behind this, you will see that when the skew levels are elevated, that it's a risk off environment. It's not a matter of if, it's when. And typically in these areas, you're seeing some sort of pullback in the market within a week. All right. So, did we get that? Of course, we had a really nice sell off on Monday, which came into a really nice zone, and we were able to buy that. But once buyers step back in, then the skew starts going back up. So we're really, look over the last several weeks right here. This is pretty crazy. 1, 2, 3, 4, 5, 6, 7, 8 for 8 weeks, so 2 months since December, we are living in this area of extreme caution, and this can really like throw traders off because if you're incorporating all this data, history will show you that you need to be super careful here. So what happens is you get traders who it's hard to put max debit into a trade like max risk because you're identifying these areas as, hey, guess what? You need to be safe. In this market with Trump, and I traded with Trump last time, it's volatile. So this makes sense. You have a lot of volatility in here on these upper skew ranges to this lower skew range in here, really 133, sorry, 133 up to 170. It gets really violent, and so just understand the environment that we're in. It's fun. I like trading it, but it's also can turn into not so much fun if you're over allocating. Because what I'm seeing, and I say this by just kind of scrolling through X and getting a sentiment, is a lot of traders one day they're like super happy, and the next day they're like super depressed. And it's like, oh, the market's rigged, or it's doing this, it's doing that. It's always like something crazy, right? But I'm telling you, price is actually just moving from supply and demand. That's all it's doing. And you can grab an edge on the market if you can learn supply and demand. And that's what I do. That's what I do at here at Simpler Trading is I teach that. And if you can incorporate it, it is going to make your trading a lot less chaotic. Okay. Anyways, we'll move on. This is an area of caution. Please be aware of that. If for some reason the market gaps down, you know, I like the risk on level down here towards 133. It's going to take a lot for the skew to move all the way down to 133. It's going to take a really big dump. There is room for it to gap up and spike back up here. I mean, over 2000, you can see right here, this spike right here. which was in December, was the highest skew reading ever. And you could go back and look at all this. I mean, usually we're living in this area here, and this has worked for many, many years. And now in 2024 to 2025, we're living in these highs. And who knows, maybe 2025 we make it even higher skew. A lot of people will say the skew's not working, and it actually is. You just got to incorporate it with the things that I'm showing you. The next thing that I would tell you, so again, a reason for a little bit of caution here. The dollar and the TNX, also a little bit of caution. It's kind of been the same thing over the last several weeks. And then we come to the fear and greed index. I think it's gone up about 10 points or so. It was in the extreme fear for like a day as we were coming into demand, which is exactly what I expected. And then as buyers came in, prices went up and then people started, to be less fearful. And that's pretty normal as well. And then as we start to head into a supply zone, which I'll show you on charts here in a minute, here's price, then guess what? Sentiment starts looking better. It goes to neutral and then maybe greedy. And then, people just kind of put on their blinders and just they buy everything and then they buy into supply and then the market drops on them and they're like, why did this happen? Right? So, anyways, right now we're still in fear. So the majority of participants are still looks like they're hedging and they're worried. They don't know what's going to come after the inauguration. They don't know what's going to be said. So I get it. All right. But again, try to cut out a lot of the noise and just trade zones. And we'll continue that path of success. Okay. So fear and greed, we got through that. Let's go ahead and get into one of my favorite parts of this broad market analysis, and that's the futures. So I'm going to come over here to the ES futures, and let's start with the weekly. Let's just kind of go over what's happened so far. We came into, there's a trendy edge right here. It worked very, very well. On the smaller time frames here in a second, you'll see we came into the imbalance I was looking for. Buyers did show up. What's really important about this chart is this trendy edge. And this is part of our 2025 projections. I told you this is a very, very important level. As long as price is staying underneath here, it's sideways to down or choppy. Now we've come back and said, hey, we're going to test this level again. But if you look closely, it's doing what it's supposed to do. It's rejecting. So this is a really important level going into this week. And just like for Friday, during our successful Friday, I told you I was looking for 60-30. I think 60-36 is what I had told you. We ended up hitting that level, pulling back. And, going into this week, this is your over under for the ES futures. So up and over this blue level, we could see prices push up into 60.98. I'd like to just get it out of the way, honestly, and gap up into this area on Tuesday. That would be really nice. I mean, it's not that much. It's 60 points. So, solidifying that Trump is the president and that's what the majority of America wanted, it seems like a bullish thing. And looking at the past performance of the market, it's a bullish thing. So I would imagine that the market is bullish going into Tuesday. Whether or not it actually were to gap this much, who knows? I have no idea. And if for some reason, okay, let's talk about the downside. If it gaps down, then technically speaking, it makes sense to me because we're at the trendy edge and we stalled at supply zones, and that's why it's so important here. Let me show you our blueprint that we used on Friday that worked really well for us. So we were long, we came into supply, we're cautious, and it pulled back. So technically speaking, it's okay if the market were to gap down because from a supply and demand perspective, that's what's supposed to happen in here. All right. So there's a part of me that's using a little bit of gut talking about the gap up part. Okay. And so I just want everybody to recognize that I am a human. So not everything's 100% technical. There's a small percentage in there that every once in a while, just reading the market is what I try my best to do. Okay. That is the weekly. Let's go into the daily. I want to show you just how beautiful these levels work. This was your buy trigger from last week. We came into the imbalance that I've been talking about. It was perfect. I hope that you also got long here. We pushed up, and now these are two new levels up here. So we have a buy trigger here and here. I'm keeping this on just so you understand where that zone is. There is a zone right here as well. And there's also one right there. So we are definitely creating a lot of demand zones. From a daily perspective, this is the cloud right here, and we're above the cloud. So that's a good thing. I would look for support and a buy trigger around 5993 if we come back. And then finally trying to move its way up into this structure here where you guys can see I have a short trigger. If this is your first time watching me, this doesn't mean we blindly go short. I teach a very specific way to get short or long at these levels when price gets there. Okay. Going to the 4 hour, you can see my zone works very, very well, guys. And you can see that this is pretty much matched up with that 60.96, 60.98. I would take the level from this chart to be careful, okay? But just know that we could move all the way up into 6100 plus before we find a little bit of resistance, okay? I would love to wake up on Tuesday and just and see this. I really would. That would make me super happy, but I'm probably dreaming. All right. Anyways, Nasdaq futures. Let's go ahead and move over here, and then we'll get into Bitcoin. So here's NQ. We're gonna go to the higher time frame. Again, this is the weekly. So we talked about the 618 before. The 618 was that secondary, right here. So this is, don't get these confused. So from this point, from here to here, we have not moved over the 618, but from a bigger time frame, um, placing my coefficients from the rally to here, this is actually super bullish. All right, so the big time frame is super bullish. Short term, we need to get over that 618, but we're back in the bull channel, whereas last week we were actually below it. And we came into some imbalances. We picked back up. We're above the 9 EMA. Unlike the ES futures, we haven't tested the trendy edge again. Whereas, on the ES, we actually came up and popped into this and then pulled back. So there is definitely room for the NASDAQ to gap up into 21,900, and that's a good 400 points away. Um, so just know that, a lot of times the NASDAQ leads, and it's interesting to see that the ES kind of led up here to the trendy edge. That means if we do gap up and this gets over this, the ES is going bonkers. All right. So again, that's NASDAQ. Um, Major levels on here are going to be 21,900 and then down here towards 21,150. Okay. All right, moving on. This is going to be our charts from last week. We have supply zones up above 21,837. That is resistance, and then a short trigger around 22,200. We are also above the cloud here on the daily. Things look good. The cloud is confluent with this inside enough formation, so a buy trigger was placed at 21,382 on a pullback. And then moving on, you guys can see here on the 4 hour, we got that same look. We didn't quite, this is interesting for me, just like I'm probably off a few. I think I am. I'm just, this is my own, we've already tested. So if I take this and I do a left extension on, see, we already tested this zone. So I shouldn't have been, so particular about this, but you can notice we already tested the zone. We made a higher low. That's a bullish note. We pick up, we move. Things are looking great. This is actually set up to be an AC/DC. You know what that means if you're in the room. AC/DC means we're looking for a move up here towards 22,285. Technically speaking, those who do not trade supply and demand, who maybe just look at shapes and those type of things, I'm sure a lot of traders are looking at these pivots and this trend line. And, some people are probably thinking, hey, it pulls back to the trend line, which was there. Go long. What I like about the 4 hour is that the cloud is almost confluent with that trend line. If it were, I'd say buy the 4 hour cloud. If it pulls back, if we gap up, just pay attention to the extension. So if this were to happen, all right, this is going to leave this 9 EMA really far down below. And listen, price always reverts back to the EMA, especially on the 4 hour. It's not if, it's when. Just know that would be super extended, and I would be taking profits if it were me, and pulling stops up on the remaining positions just in case this thing decided to dump from here. Okay. Again, we're going into earnings season. I'm not expecting like this huge pullback or anything like that, because I think a lot of investors are looking for some sort of guidance going into 2025. And this is a big week, and next week, and we have a lot of big tech companies reporting. So big gap up. I think we take some profits, pull stops up, and understand it could get choppy into earnings season. My last but not least, I want to go to Bitcoin really quick, and then I'll go to the VIX, and then we'll be finished here. Don't forget to hit the like button, please. Right here on the Bitcoin, what's important is the monthly. I'm in Bitcoin. You guys know that. This is a long-term trade for me. I'm not trying to make a couple thousand points here. I'm going for the big one. I'm already up quite a bit, probably about 40,000 points or so, but I am looking for prices to extend and move to the upside. But I'm also, just understand that all I'm doing is adding into this when I get the opportunities. So 87 and some change right now is my overall support for Bitcoin. You can see this 9 EMA is confluent with the demand zone. I'd be buying in here. The way that I approach this is I just buy on the first of every month. I put some money into Bitcoin. This is an inside and up formation. This is beautiful, but I also, if we were to spike up, I would expect it to be pretty choppy and come back in for a little while. So it really looks like the market is set up to be a big push and pull, push and pull. You know what I mean? Like a lot of volatility, especially with Trump coming in. So be prepared. I hope you guys got a plan. That's my Bitcoin. All right. And next targets are 113,000. Okay. The next thing that I put out on X was VIX. And just something I noted here on the daily, looking at this cross on the 50 SMA and the 200 SMA. There's a lot of people that use that, and that's why I brought it up. But I want you to do your due diligence and just see if you can come up with a probability. But if you go back several years and just look at every time the pink line, which is the 50, crosses below the 200, and the 200 is kind of doing this. What is that called? You should know. Look it up and look back at the past and see what happens. This kind of gives me, a clue. It makes me feel like what we could see is continuation to the downside towards 13 and some change, which means the market still has a little room to pop to the upside. But we'll see. Price is king. All right. I really appreciate you guys. Can't wait to trade with you. See you on Tuesday morning. You guys have an amazing 3-day weekend, and we'll see you soon.